So you just got your first job, and you don't know anything about personal finance. There's a handful of things you want to get right immediately, and there's a good chance nobody told you about them. This video is geared towards people that want to learn the bare bones of personal finance. So if you're still in school or college, maybe you're even at the start of your career and you just haven't had a job before, I'm looking to serve you with this video. So let's start. Opening a checking and savings account. This is going to be your first step. If you're under 18 and you don't have a checking account yet, many banks have the option to open a joint account with a parent. So, under 18, go ahead and open a checking and savings account so you can start that habit of using one account for your spending and one for your saving. Most banks will have some sort of maintenance fee by default, but it's going to get waived if you maintain a certain minimum balance or you have direct deposit with your employer, which more than likely you do. So just make sure you're set up so that you don't have to pay anything to keep this account open. As for where you should open an account, it doesn't have to be very specific. Just talk to someone in your personal life that's financially responsible, like a parent, aunts, uncles, whoever, and just copy what they do. There is an argument between should you go with a bank or should you go with a credit union, but that's not really going to matter too much at the beginning of your financial journey. So as long as you're not paying fees, you don't have trouble accessing your money, you're fine. Definitely get a debit card as well, especially if you're just beginning your personal finance journey, as you're gonna want cash and some sort of way to pay digitally. Speaking of ways to pay digitally, credit cards. You'll want to get one as soon as you turn 18. And if you're not 18 yet, you can talk with your parents to get you on one of their cards as an authorized user. That way you get to build up your credit score without actually even being able to take out a credit card yet. Now, to be clear, you don't need a credit card, but opening a credit card soon after you turn 18 is going to put you on track to building a strong credit score and doing it quickly. That high credit score is a necessity for getting approved for loans and more desirable credit cards in the future. A higher credit score is also going to get you better rates on your loans, so you're basically getting a discount for having a good credit history. Now, all of that said, having a credit card is playing with fire, and you're opening yourself up for some of the worst interest rates that you can ever encounter, and the potential to scar your credit worthiness for years. So, you should never miss a payment on your card. You should never leave a balance on your card. That minimum payment that you see, it's a trap. You need to pay the whole thing off, or else you're going to get hit monthly for an interest of maybe around 20% APY, which is ridiculously high. If you're not familiar with how compounding interest works, let's say you have a $100 balance on your card for a year. That's an additional $20 that you need to pay by the end of that year. So don't treat that credit card balance as extra money. Only buy with a credit card if you have the cash to buy whatever it is you're looking to purchase. That said, how do you get a credit card? It's not very complicated. You just pick a lender and you apply online. If you're just starting out, you don't have any credit history, you're not going to be able to apply for most cards. But you can open a secured credit card. The way that works is you're going to have to make some initial deposit, and typically that deposit is going to be your credit limit. So you give the credit card money, a couple $100s, and they'll open you a secured credit card and send it to you. Now you have a credit card that you can use to start building credit history. After some amount of time, kind of like a year plus, you'll be able to change the card to an unsecured card if you have good credit habits with said card, and they'll give you that couple $100 deposit back. As for what card to apply for, I'd just go with any well-founded lender, any of the companies you've heard of before, or someone you financially trust uses and recommends. Just make sure there's no annual fee, and you get your deposit back once you switch it to an unsecured card. Now, not a sponsorship or financial advice. I mean, you have to keep in mind I am just some idiot yapping on the internet. There's 100 of those. But the Discover Secured card is a great option, in my opinion. There's no annual fee. You get your deposit back after 6 months of responsible use, and they start tracking your credit worthiness after 7 months to see if you're eligible for an unsecured card. which would be the Discover It cashback card, and in my opinion, that's one of the best beginner credit cards on the market. Now, if you already have a credit history and you don't have your own card, I'd still definitely say that Discover It cashback, that's a great first card. Again, not financial advice, just my opinion. But now you have your credit card. You need to use it responsibly. Now, I've been saying responsible use this, that. What does that actually mean? So, all responsible use means is never missing a payment, always paying off your card in full before that month's statement is due, or else those rates we talked about, they're going to screw you, and keeping your utilization low. And all utilization means is how much of that, credit limit you're using per month. So keep it at a small portion. Aim for like 10% or lower, so let's say you have a limit of $500, you should try to use no more than $50 by the time your statement closes for the month. Now you can do that by just not using the card much, maybe you only use it for gas or something like that, or you just make a payment before your close date, and voila, you're under that 10%, even if you use significantly more than that on the card. As long as you pay it before your closing date, that is all that the credit bureaus are going to be seeing. So just starting out, I'd recommend using cash or debit for most of your purchases, and, just use that credit card for a handful of purchases, enough to keep some money flowing to build that credit score, but not enough that, you're going to find yourself in a bad spot when you're just new to all of this budgeting, saving, etc. You get to have the benefit of using the card and building your credit without the downsides of getting killed on that interest. That being said, automatic payments are your friend, so I'd recommend setting those up linked with your checking account, just so you don't get hit on those fees if you miss a payment. That way you won't miss a payment. It just happens automatically. Don't worry about it. So I think that's enough discussion on credit cards. I really wanted to spend a decent amount of time on that because that's probably the easiest thing to trip over when you're just starting, right? Because you want to have that card, to build your creditworthiness, but it is full of traps. So just that responsible use, make sure you're doing that. So let's talk about budgeting. So at this point, I'm assuming you have a job, checking and savings accounts, and maybe a credit card. You have money coming in, you have somewhere to put it, and you have a way to spend it. Now you need to make sure that you can actually keep it. You really should make some kind of budget. I know everyone says that, it's not glamorous, but it's the most important step to keeping yourself in check. There's a lot of ways to do this. I know there's apps that link to your accounts and do a lot of that heavy lifting for you. I personally just like using a spreadsheet to create my budget, and then I do some basic tracking of my spending on there using my bank statements, but that's just going to be up to you personally how you want to track that. Your goals with making this budget are really just to allocate how much money you're spending in different categories every month or week, however you choose to track it. So, gas, groceries, going out to eat, whatever. How much money are you spending on each of those? Make sure you're not spending too much money on, say, going out to eat. Maybe you don't think you're spending a crazy amount, and then you actually start looking into it, and you spend a lot more than you expected. That's really the point of this budget. Keeping track of that, and then at a high level, just making sure that your income is always higher than your expenses. And of course, the amount of money that you spend and where you spend it, it's going to look different for everyone. So when you're making those breakdowns of where your money's going to go, you have to make those decisions for yourself in your situation. But don't forget about saving some money, right? The general guideline is that you should be saving 25% of your income, but of course, everyone's situation is different, right? Maybe you're really in a paycheck-to-paycheck situation right now, and saving that money is difficult for you. Definitely think about what that budget looks like in that case. See where you can cut back some costs, save some more money. You do want a bit of a cushion there, right? But maybe you're not putting away, $1,000 a month into some sort of fund. Not everyone's going to be in that kind of situation where they have the financial freedom to do that. So use your own discretion and be responsible, especially when it comes to saving. Speaking of saving that money, how much are you saving? Where are you putting it? And I'd really say, starting out, immediate actions. You need to have some kind of cushion in your checking account. I would say, see what your pay period is, do you get paid weekly or bi-weekly, and figure out, hey, for any given pay period, what is the most amount of money that I'm going to have to spend? And that's what you should really keep in that checking account. So, let's say between rent, groceries, whatever else, the most you expect yourself to spend in a week is $1,500. I'd make sure you have that amount in your checking account, and then, a little buffer as well, just for nonsense or whatever. So, for $1,500, maybe keep like $2,000 in that checking account. Now, once you have that money sorted out, you're going to want to start building your emergency fund as your next step. And again, it's going to be person to person. The general guideline is 3 to 6 months of your expenses. That's how much cash you should have on hand in this emergency fund. So put this in your saving account for now. But if you open a high yield savings in the future, I'd really suggest putting this money in there. Now, I've taken a lot of your time today, so thank you for staying attentive through the whole video. I hope this was informative for everyone. These are really just the most basic things you want to have on your mind at the beginning of your financial journey. In my next video, I want to cover some of the basics of investing, both for retirement and shorter-term financial goals, so look out for that. Thanks everyone. Peace.